Everybody, it is Wednesday, the 22nd of August, 2018, and the S&P 500 did pull back slightly here today. That is after yesterday's break to new all-time highs. And once again, what we saw happen was that this market had tested the support over here, shook people out last week, and then made a nice run. We always have to ask ourselves, where has it come from when looking to purchase a breakout? And certainly this market got a little bit near-term extended. We are right now above the week-to-date volume-weighted average price. That's here. But more importantly is this rising 5-day moving average below us and this prior band of resistance. So tomorrow we'd like to see the market hold above 220, 285 and a quarter or so. If it pulls back a little bit, it wouldn't be a big deal. We're still clearly in a longer-term uptrend. The Nasdaq made some nice progress here the last couple days as well, as we've been noting the 30 on the 15-minute time frame. We broke this downtrend line on Tuesday, and then it did what we wanted it to do, which was to pull back, test the 5-day moving average, see that 5-day moving average begin to rally, and now it's in a position, I think, where if it gets back above the high this week, that it's most likely to be able to continue up to new all-time highs, with a stop then below today's low. Under here, if you were looking for to swing trade it up towards that all-time high. The Russell 2000 continued to follow through here. We didn't get the pullback we were looking for. Instead, it broke higher here on Tuesday and held on to those gains today. So while this market might have been a little bit extended and we were looking for a pullback, it did continue to move higher. So risk management is always job number one, but it's basically doing what we wanted it to do, which is these higher lows were compressing up against that resistance line that was down sloping, and the market broke higher. So buyers remain in control of the Russell 2000. If it's to pull back, that 169 and a quarter level is likely to be the area to be tested because that is prior resistance, and that's where we have that rising 5-day moving average. Semiconductors made some progress here today, but I don't see any real reason to be involved in them. They're still just kind of back and forth within a range. We've got a declining 20 and 50-day moving average overhead. Maybe we continue up towards that level, but overall, we've got a range that's been tightening here. And the energy is in an interesting area because now we have this year to date, this volume weighted average price, not year to date, but from the April low, which is just overhead. Let's clear all that stuff off. And we got our bounce from the 200-day moving average. Now we're up to the prior band of resistance here, which then became support. And now we're going to see if it does hold as resistance and this market drops lower. I'm not predicting that, but it certainly seems like the most likely possibility. I wouldn't short it yet, though, because we are above a rising 5-day moving average. It most likely needs to get back below the volume weighted average price from that break lower. So I think you could look at it as on watch for the possibility that it could break down, but not quite ready to do anything with it yet.